Hi, just having a look at the pound to the US, also called the cable, sterling to the buck, and just looking at the monthly of all data, and just want to get an idea of what possible targets are out there. Now we can see that that 137 level, it's hit it three times, 92, 2000 and 2008, and it has provided quite strong support down there. Each time it's been a real spike down and then bounce back up. So that we have to acknowledge that there is that triple bottom sitting there. There is a trend line running underneath each of them, and it would give us a 134. But that's an extreme move. Now, looking at the top end, we see that at £2, or sorry, at $2, there's extreme resistance there, and it really stuck like glue back in 2007, and that's the basis of it. Now, just visually, the 50% is going to be around here. We can see that that's around the level that it was back in 98, and since the big crash, price has not come back up to that level, so that central pivot hasn't been hit, and visually we're back into the middle of what's happened since the crash. So the high low from here and here, we're back in the middle of that. So we are at some sort of balance, though it is under extreme pressure. Now, a couple of things I want to look at. This was the big drop that it took in 92. This was a bigger drop, so that's the biggest range that it's played out, and it's played this one again in here. This is the third range. They're all fairly similar ranges. Now, if this gets considered first leg, and we're just knocking out a bit of a triangle at the moment, what can be brought into these areas, that would give you the quadruple bottom and the testing of that support. It's just to give a bit of an idea of that overall structure. If you really brought this one across, and then we can see that that parity level can be tested. It's hard to believe, but it is possible. If we brought this leg over, then we're still coming down into a 105 sort of area. They're major tests. I really don't think they're going to be. Now I've just gone with some lines to begin with, just to show where we are at in the place at the moment. If we do the trend line across the top there, we see that we did have some sort of breakout. We've walked down the line, we've broken back under it, we've popped back out, we've been testing it, and we've popped back out, and we haven't come back and tested it again. We're now sitting on this under trend line as support. Candle is coming back for it though. There was one more thing on this weekly one that I wanted to just, on the monthly, and we can see that it did hold some sort of a support line in here. It did break it, turned out to be a false break, and look at that move afterwards. So that is something that I'm being conscious of, because it's still something that's happening in this area as well. Now I'll come back into that weekly and just have a bit more of a look of these lines. So that's our only real support trend line that we've got going at the moment. If we look at the bigger structure, and if that holds, does that bring in that 186 sort of area, and where we come up, test this central pivot point that I was mentioning before. I haven't. I'll find that with ichimoku later. I don't. Otherwise, it's just an eyesight thing. If we're looking at this overhead resistance since the crash, we see that we've failed at it. If we failed at it, that brings the bottom of it back into it, and that could bring in a 137, a testing between these 2 points, if this line here fails. But as you can see, we've had very strong support at this recent low level at that 152. There is that strong support. If it breaks it, well, that means there's a lot of stops sitting underneath there that could get attacked. The current trend line in here, or resistance line, we see that the resistance area is held, currently operating as a triple bottom, and that would open up this 148 sort of area. That's just to give you a few ideas on some lines. Okay, now I've just got rid of some lines from in there. I've only kept the lines that matter. So we've got the current resistance line going across the top, the current support line coming across the top. If it breaks that, well then this orange line. Yes, there's more in there. I'll look for them when I need to. At the moment, these are the only lines that really matter at this stage. I'll bring back in the ichimoku because I just find that it just shows where the balances are in the middle. Now we're currently on the weekly chart here. I'll bring it in a little bit closer just to highlight that currently we're underneath all the balances. We've been maintaining this bear cloud now for the last I don't know, several months, and price is below it. Means we're below any of this balance, any midpoint of this area. We're below. The big question is whether we can come underneath this big area. I've represented it with this pink line for memory. Oh no, can't be. But we're underneath all the 50%. We're underneath this 50%. The faster line, the pink line, has just crossed back through this red line, which is a strong bear signal. This lag line is just interacting here, and that's opening up the possibility of coming down and testing this double bottom period. If we go into the daily chart, we see that price last week on the Friday candle came across the consolidation, brought us into the cloud. We weren't able to go up and touch the top of the cloud. By not touching that, I consider it quite bearish. But while it was in the cloud, it had the volatility to be able to jump around. It's back out of the cloud, and it's now back underneath the lines. We see that the lag line through that candle, that move, punch back up through. It's come back down, and now it's got some candles here. But if it comes down and it's all we're hanging on is this, it's not a hell of a lot to be hanging on. Now, when I come down into the 4-hourly chart, this was last week's effort where it came up, did the consolidation, ended up with a lower high, and wasn't able to hold that through the Bank of England adding to the quantitative easing. They've added to the amount of pounds out there. They've managed to drive it, and we now have a lower low. So I do consider this to be quite bearish. Now, the areas that I'll be looking at for entering into a trade here, the first area has got to be in this consolidation area here, which is at 155.2 roughly. But reality is that I'm going to be looking for the 50% area. Now we see that that's still including these candles, so I consider this area. We've got the new low coming in, but so it's roughly that 155.60 again. We're back playing in this sort of area. I'll just bring in the crosshairs, it'll give it a better idea. And we see that because we've generated a lower low, this average, which was sitting around the 156 even, and has now come down to sort of 155.90. If we come into a 1 hourly, we see the devastation that the Bank of England's move made on it, and that it's had a massive bear trending week, and that if to try and come back now into that 156 area means that it has to actually break the cloud and come back up through, versus that 155.9 area. It can do it if it did it rapidly, but essentially the Ichimoku is suggesting that 155 flat coming up and testing these areas in here has now become the 50% of this range. Thanks, hope you find that interesting.